Fantastic.
Practical?
Excellent.
So in terms of the speakers, I think all of them are actually very good in the sense that they are more of a practitioner rather than in terms of the academic. So what they actually shared with us is actually very valuable because we are also practitioners and basically we could actually utilize what is actually being shared to us.
More adaptive leadership. And adaptive leadership is who allows the people to come together and develop this solution for themselves because people are smart.
We emphasize our environmental friendliness, try and do our best to implement the SDGs, which are the UN Sustainable Development Goals.
With regards to the ALA Skillsoft e-learning module on customer engagement, I feel that it is a very good module because my retail staff, they have been used to certain way of handling and negotiating with our customers. After attending this program, I have shared some of the key learnings, which is to practice active listening and also to be able to empathize with the customers.
MIM e-learning platform. Of course, there is a lot of videos there, articles globally and locally. It's very helpful for me to plan our company strategy.
Now that I am getting the MIM professional membership, I'm going to put it to good use. MIM has a very comprehensive, competent network of practitioners and I look forward to engaging with them.
I felt very honored and very glad that I actually got the opportunity to join this MIM course.
I feel that the coming of this program is timely, especially during this COVID-19. This COVID-19 has changed the landscape of the business that I'm operating in.
It's very interesting because as a CEO, they've actually given us all area to cover. So it is very interesting that we could recall back the informations that we should gather, even though it's not related to us, but still we have an inside info so that I can use it in my own field.
In a comfortable position, I felt myself shifting to an uncomfortable position in a positive sense. I left feeling inspired and ready to transform my organization. In fact, as soon as I went back to work, I shared all the tools and materials that are given by MIM with my staff, and we are ready for the new normal.
Insight, I would actually call it insight because throughout the course and the speakers, sharing of the content is actually gave a lot of insight in terms of the tools, management tools, and also the work that is related to our daily as a leader type of work. We get a lot of insight from this course content, which we can actually apply on a daily basis.
Very, very sure that what I've learned here, it will definitely help tremendously in getting results for my business.
The timing of this program is a godsend for me.
I said I wish I've attended this program 20 years ago. I would have done much well in my business.
Thank you, HRDF.
Thank you, HRDF.
Thank you, HRDF.
Thank you, HRDF.
Thank you, MIM.
Thank you, MIM.
Thank you, MIM.
Thank you, MIM.
Good afternoon and a warm welcome from all of us at the Malaysian Institute of Management. I would like to take a big shout out, thank you to all that have joined us. We have about 200 participants who have actually already come on board for the MIM Crucial Conversations. Our topic for today is Post-Budget 2022, Rebuilding National Resilience. Please allow me to say thank yous to our sponsors, Konrad Adner Stiftung, and supporting partners, Federation of Public Listed Companies, Berhad, and the Malaysian Insurance Institute for their continuous support to us. Also, a big thank you to our esteemed speakers today who have joined us, Professor Dr. Jomo Kwame Sundaram, Dr. Jasmine Begum, and Mr. Kian Ming, who have come on board to share their knowledge and expertise on this topic. Now, before I go on further, I'd like to set the scene a little bit. The budget 2022 was actually tabled at the Parliament on the 29th of October. And the approach that it took was inclusive, where it honed in around Keluarga Malaysia approach and really, focusing on recovery, rebuilding national resilience, and also catalyzing the reform of socio-economic activities as well as the national digital economy that agenda that we have. Having said that, I think all of you will agree that, I'm not exaggerating if I say that there's been a lot of talk in the last 2.5 weeks, whether it was economists or analysts who were actually, telling us whether we've actually done as many hits or misses or challenges that the nation faces going forward. So in light of that, we have actually designed our webinar to cover 3 main aspects, and that being the overall macro overlook of this budget, as well as organizations and individuals. Now, without further ado, and in the interest of time, I would like to actually introduce our first speaker, Dr. Jasmine Begum. She's the Director of Legal, Corporate and Government Affairs at the Microsoft Asian and New Markets Microsoft. She brings to table for about 20 years of experience. She has had many leadership roles in companies such as Dell Malaysia, the United Nations Development Program, and so forth. Without further ado, I'm going to actually bring on Dr. Jasmine, who is going to actually speak to us about the opportunities to thrive in the digital economy. Over to you, Dr. Jasmine. The virtual stage is yours.
Ms. Suganti, thank you so much for the opportunity and for the kind introduction. Bismillahirrahmanirrahim. Assalamu alaikum and a very good afternoon to members of MIM as well as the audience. I am in fact really honored to be able to present today, and I will jump straight into the presentation. We are looking at addressing on the challenge and the opportunity it presents. How do we recover to reimagine to a new normal? And how do we thrive? And largely, we have framed it around 3 big areas. The technology, of course, the underlying technology, and technology not as just something that you want to plug in because of necessity, but integral part, and talking about it from a digital economy perspective. With the global GDP today, digital economy contributing 15.5%. And what is the market share of Malaysia in that, and our own ambition and aspirations, and how do we look at these opportunities? So with that, I will go straight into, I don't want to go too long into this, but I thought it would be a miss if I do not address how quickly we moved from a health crisis to a social crisis, and how societies were affected, and just the domino effect from the health crisis that did hit us all. And finally, addressing the economic crisis. We did see not only stunted GDP growth globally, but also APEC saw a big hit and was actually called one of the world's worst recessions since the Great Depression. But I think the fact that we were hit at this point in time, where we had technology sort of there was a silver lining. I always say the most effective digital transformation officer was the COVID, because what would have taken 2 years, just got transformed overnight. Thanks to the power of technology. And I think in addressing that, I want to sort of break down and look at those opportunities and what does it mean in the context of Malaysia and the ensuing policy documents that actually has come out since. So in going into that, let me first address the problems that we are looking to solve. A global economic crisis. You are not just looking at your market, but you're actually looking, globally, how do you now also integrate and see some of those opportunities that came about because of this crisis. China introducing the China plus one strategy, the opportunity to return to a different economy, and finally skilling and more skilling, and why that is going to be critical. I do want to sort of tie it back to some of our own policy documents that has since come out, particularly focusing on the Malaysian digital economy blueprint, the 12th Malaysia plan, and the most recently announced also the budget document. I think one underlying factor that sort of cuts across, apart from inclusion, is how do you use digital and technology for recovery and resilience building. I think with resilience being the underlying message and underlying effect that pushes for our recovery, the other most important component of this document is driving competitiveness. How does technology now help us to drive competitiveness, not only of our businesses, but also us as a nation? So let me sort of start by saying we are addressing this by looking at four big opportunity areas that we want to address. But before I go there, I was just monitoring, just as I was coming on, and I was making sure I was quite up to date to what was happening as we wanted to address this. There has been a Grab outage across the region, and Grab engineers are trying to resolve, this outage. Can you imagine if this was actually a financial sector outage? Today, especially at this point, it is a flashpoint as we think about why digital infrastructure is going to be so critical as we think about resilience and recovery. And that's why when I saw the first point being technology as a platform, I was reflecting on how things would have been so different, how businesses wouldn't have been able to operate during Ramadan, especially the Bazaar Ramadan, where they had to shut down in the first year and they had to resort to selling from home. And just this is the new norm, technology as a platform. But how do we make it more structured? What are the policies that we want to build around those? And looking at the digital native policies for the 21st century. And what do I mean by digital native policies? A lot of the policies that we build for digital today are based on the analog policies. And one of the things we learned during this period is that you have to build digital native policies and not try to force fit them into analog policies. And this is one of the learnings, working across the different countries in the region and globally. We saw how quickly governments started coming out with digital policies so that they were able to address and enable accelerate recovery. So this is one of the area to path to economic recovery. And I think I do want to call out the fact that in the budget that was released on October 29th, digital first initiative was called out. And with the government's ambition of having 80% of data go to cloud, there's a bold ambition. We now need to think, how do we operationalize it? Innovation as culture, and I think this is another one where we do see a lot of opportunity as well. Nations having huge ambition about becoming startup nations. We have seen Indonesia do it. We have also seen other countries in the region do it. And how do Malaysia now seize the opportunity? The recent Meranti announcement by Technology Park and Magic clearly shows the pathway forward, and the budget allocation that was also included in the recent budget. I think it certainly surely shows where the government is headed. It is now for us to seize that opportunity. How do we now, what does it mean, innovation as culture? This is not new. We have been talking about innovation, but today, innovation has the meaning, especially when it is tied to data. Similarly, education and skilling, and I think this has been spoken often, and we saw this right at the outset in the video, why skilling is going to be important. And as organizations and companies look at building in a resilient infrastructure as part of, especially we see this in MSMEs and SMEs, and we saw this also being called out in budget. I would like to say, sort of summarize this slide by saying, while policies play a role, we need to also look at the opportunity of positioning Malaysia as a digital workforce as a national agenda. You can serve the world out of Malaysia, and building resilience and institutional infrastructure. And I just talked about what happened to Grab today, the outage, since this morning across the region. What is it that the world is looking to address? Definitely new business models. And how do policies now enable that, right? And I think the digital economy blueprint was intended exactly for that, to accelerate, to transform, and to quickly come out and be competitive. And I think in looking at this slide, I would like to sort of point at two things. While we look at new business models and the economic recovery, but there is a huge role that the government can play in ensuring that the policies are actually effective to enable this modernization, especially around digital infrastructure, and making sure that the decisions that are made are operationalized, whether it is in the blueprint, in the 12 Malaysia plan, or in the budget. And finally, on looking at economic recovery, I think it is not just about inclusive economic recovery, but also ensuring that we are competitive, as every country in the region is going to compete for the same pie. And I talked about opportunity at the outset, and that was the topic given to me. I think we do see contactless shopping coming up, and this is something that we have seen not just during the of course it got accelerated during COVID, but it started before. Remote learning, definitely the solutions that are coming, that are made available, telemedicine and virtual visits have now become mainstream, and governments beginning to recognize this importance. And finally, remote selling. Why is this important, and what does it mean? What are the nuances involved in remote selling, especially in remote selling, because the feedback loop for customer service is so fast. You are able to improve your products, and you are able to launch new products faster. So this opportunity with this rise of new technology is something that we want to note. And how does Malaysia then seize this opportunity? So the engines of our future, definitely what we see, not only in Malaysia but across the world: artificial intelligence, Internet of Things, mixed reality, blockchain, and quantum computing. Unfortunately, as a country, we are still looking at the basic. Can we use cloud computing, which is not even on this slide, right? So what are those principles? And I think, fortunately for us, the digital economy blueprint and the recent announcement in the budget emphasized on the use of cloud. And I think this is one of the areas where we see SMEs and MSMEs do not have to invest in infrastructure, and they would be able to switch on technology much faster, and for them to also accelerate their recovery. So as we look to the engines of our future, it is important for policymakers to think, how do we also future-proof our national policy to encompass some of these emerging areas? And to say that, we also must talk about technology just not as a technology as we see it. It is about going beyond digitization. And why so? Especially that we see in this pace now, the pace of innovation. One of the underlying factors to transforming a digital economy is what we see in data. And why is data important? We acknowledge that most organizations are data rich but insight poor. I think in the video someone spoke about insight, and as let me briefly address this insight. Most organizations, and including governments across the world, are data rich, but they are insight poor. as they do not turn their data into something that could be innovated upon or that could help them make better decision. We did see in the digital economy blueprint that data-driven decision making has been called out, and I think that is a big progress. Similarly, organizations can use data to transform businesses, to transform their business services, their products. And I think this is where we want to see how some of the grants that has been given for automation, I think this is where we use for big data, artificial intelligence, and these are areas where we see Malaysia has opportunity to keep growing. As we know, Singapore has been one of the largest exporters of largest recipient of foreign direct investment for artificial intelligence. And Indonesia has been the largest exporter of artificial intelligence. Where does Malaysia have a play in all of this? How do we become a market force? And I think this is where we talked about the culture of innovation. The culture of innovation in this 21st century, especially in the post-pandemic world, it's all about services and products that are continuously growing, because you do have customers who are super demanding, and we do have discerning citizens, discerning customers, and who know what they want. And in fact, the opportunity that it presents to us is that we are able to be agile, to be able to respond to whether it is a citizen demand or a customer demand. I think one of the areas that we have seen the biggest hit is definitely in the MSME area. While they continue to grow, contribute to the GDP, they are one of the largest employers in the country, but also we see that the need to digitize them. And that is a big number. And this is not a number that just limited to Malaysia. Across the world, we do see the reluctance for MSMEs to digitize. And we note that most of the policy documents that has come out in recent times have addressed the need and the grants that have been allocated, as well as budget that has been allocated to digitize. But beyond that, I think we need to educate not only our MSMEs, but also the ecosystem that supports the MSMEs, that there is an opportunity and why digitization is important. Especially in traditional sectors, we do see that there's a bit more reluctance, but with the lockdowns, they saw the benefit of digitization. And I think with the government recognizing the need and allocating the budget for MSME digitization is an opportunity for us to seize and see how we can support them, especially for those who are in rural areas. I think I talked about this quite a bit earlier, but I do want to call out the fact that the budget clearly called out the Digital First program. And what does that mean? In countries like Brunei, one country that I've worked on, where they have decided that every company is a digital company first. So if you go and register a company today in Brunei, they also give you a digital registration, that you have a digital presence by design. And that I thought was one way to sort of encourage SMEs and MSMEs to be able to toggle between online and offline, especially for those who are not able to start off their businesses online. We do know social media business is something that has caught on, but to properly set up this digital first businesses is something that we see many governments are beginning to encourage. And definitely the fact that it is led by example by public sector is something which is really commendable. And I do want for us to understand that when it comes to digital first, there are nuances and concerns that are always raised with us. Privacy concerns, cybersecurity concerns. So educating the users as part of this transformation is going to be very critical. While if we want to thrive in digital economy, the opportunity is vast, but it is also important that the users understand. And that is why I think as we look to go into using of this cloud computing, we also educate the users, and there is a huge opportunity to educate on privacy and security. And I want to go into the next part of it, focusing on data and what does it mean from an opportunity perspective. This is the number of countries that has had huge economic impact with data and artificial intelligence, and countries that have focused on growing their economy based on not just on digital economy, but also, although this is slightly an older data, but I do have a slide coming up. But for us to focus and see what have they done to drive this data and AI, what kind of wallet share were they thinking of as they started out? And what were the enabling policies that they looked at to enable government, to enable the society to drive innovation based on data and artificial intelligence? So in 2018, the global value of AI and advanced analytics was 1.2 trillion. In 2019, it was 1.9. In 2020, it was actually around 2.6. It was higher because of also the pandemic. And we do see in 2021 for it to reach about 3.3 trillion and 3.9 trillion in 2022. As we look at this opportunity, I think it is critical for us to look at two things. What is the wallet share of Malaysia? What are we doing about it? What are our businesses doing about it? What are the organizations doing about it? Two, what are the enabling policies today that will allow Malaysian organizations and Malaysians to thrive, to carve out a wallet share? What is Malaysia's wallet share in this? And I think this is where I wanted to look at that opportunity presented through the various policy documents we talked about at the outset. While we talk about digital first and we talk about cloud first and digital policies, I think Malaysia is still looking at coming up with the AI policy framework, the ethical AI policy framework, as one of the things that we talked, Malaysia is looking to do. But we need to accelerate. As countries look to recover and the opportunities presented through AI and advanced analytics are vast and huge, and every country in the region is looking to seize this opportunity. And it's right for us to right now to see what is it that we need to put in place. What are the infrastructure? And one of the biggest area where we see gap, right, as a technology company is in skills, talent, whether it is in privacy or security, cybersecurity, or in AI and analytics. We are continuing to face the skilling challenge, the lack of talent, a shortage of talent. And definitely, as we talk about the opportunities, and I want to focus on the opportunity part of it shortly, but here is the market share. And we want to see what can Malaysia do to seize that. And with that, I wanted to, sort of bridge over to people, and I talked about where we need to build the strength. Skills will be the new currency in the post-pandemic world, and 77% of the jobs posted on the platform on LinkedIn focused on skilled ahead of industry experience. And Microsoft committed to skill 25 million people worldwide. And in Malaysia, we committed to skill 1 million people. And we partner with HRDF, Talent Corp, and several other organizations to bring this new skills that is needed to fulfill the new jobs that are also emerging post-pandemic. I think the government has announced in the Digital Economy Blueprint that we're looking to create 500 jobs to contribute to 22.6% of GDP by 2025. And that's an ambitious number. But why do we stop at 500,000 jobs? Why are we limiting ourselves to our borders? Because today, I sit in Malaysia servicing the region, and I didn't have to move to Singapore. And that was an opportunity that we can work from anywhere in the world. A digital workforce as a national agenda has to be top of mind, because we do not have to physically move to other countries to work. We can bring in the jobs. Malaysia just need to build the right talent. And I think this 500 jobs, 500,000 jobs that we want to create is definitely a great aspiration. But I do think we have an opportunity, especially now as we look to recover, to build our muscle and strength around building a digital workforce that becomes the national agenda. We have seen countries like UAE embarking on a similar exercise. We do see today Thailand looking to become the ASEAN digital hub, promoting for talent and startups and scale ups to move to Thailand. So definitely it is going to become competitive, but I do think as a nation that largely speaks good English, we would be able to compete effectively with the rest of the region. So what is the global versus local skills gap? These are numbers that we sort of seen. Uh, there will be about 14% global workforce that we need to switch to occupational categories by 2030. The class of 2030 is going to look very different. According to My Future Jobs, 58% of jobs placement in Malaysia are mid to low skill jobs. But how do we now move that? And both HRDF and SOXO are Microsoft partners, and we partner with them to provide this new skilling. Definitely, we are encouraging people to come in to skill up in these new areas. While it has been slow because of this mindset of it's going to be hard, data science is going to be hard, cybersecurity is going to be hard, but we do start at a fairly entry level, and you do not need a computer science degree. So we are encouraging those who are not in the computer science field to actually look at some of these technical certification that has now become available, and to go into skills so that they can become reskilled and upskilled to serve the job opportunities that are out there. We do know that the number one source of new wages is computing. And this is not limited to just IT companies. New computing across the board has become the most demanding job, and a job that is highly in demand. And I think this is where, as we think about reskilling and how we address opportunities, those who actually have a social science degree shouldn't stop them from looking at certification in some of these technical skills, because those are jobs that are available out there. I do want to share a bit of the study that Microsoft Malaysia produced together with IDC. IDC came up with this report when Microsoft announced our Bersama Malaysia initiative in April of this year. We made a commitment to build a data center, to build a region data center in Malaysia. And what does that mean? We are looking to create 19,000 new jobs and 4,500 IT-related jobs. And this is what it means to have cloud dividend snapshots. And in this study, we do recognize that although the jobs of only 4,500 jobs are going to be IT skill jobs, but still it is an ecosystem of jobs that are being opened up through our investment in Malaysia. I want to sort of wrap up my presentation in the last 4 minutes by looking at 4 trends that will shape the new normal. Protracted disruption. It is going to be ongoing. The faster you get to the market, you will have the first mover advantage. Deglobalization is happening. Protectionism is coming back. And there too, we see an opportunity to see how do we become leaders. More data. Let's look at how do we use our data to make better and faster decisions, and contact-free economy is the future. I do want to talk a bit about the rise of contact-free economy. And when I put this example of Grab, all of these 3 runs on Microsoft platform. They all run on Azure. I didn't realize that there was going to be an outage today, but I did want to share the rise of contact-free economy is a fact. Dr. Tuyu is an example of how a young man who started out, to offer these services maybe about 5 years ago, and during the pandemic, he just grew and he went into markets. I think he was already present in few other countries in the region, and definitely we saw the need for telemedicine during the pandemic. And Microsoft announced a partnership with Silos, which is San Jose-based, Silicon Valley-based company to bring lights out AI automated based manufacturing services to Malaysia. And these are opportunity for Malaysia to provide leadership, but also to create jobs and investment. I will wrap up by saying the future has to be secure, resilient, and inclusive. And in order for us to participate effectively, the underlying foundation here would be skilling. People are, people are a renewable resource. And if we can skill up and ensure that people are properly skilled to fill these jobs, we will really be seizing the economy. Technology is an enabler, but truly people are the renewable resource, and we can make a difference in digital economy. With that, I thank you.
Thank you so much for that, Dr. Jasmine. It was very insightful, and I must say that as part of research that I was doing as well, how you said everything has been fast forward due to this COVID. One of the research papers that I was looking at is the public sector overall globally has grown digitalization by 530%, the public sector. So I think what you leave us with is the thought of there is really no time for sitting back and wondering whether we should go ahead and do digitalization and take and seize the opportunities, but really execute and continue to move forward in this space. So thank you for that, Dr. Jasmine. I'm going to actually introduce the next speaker, Mr. Koo from Video Malaysia. He's the Executive Director for Tax, and he specializes in income tax, particularly in corporate income tax. He has a range of local and multinational clients that actually range in different industries. He also does consulting in tax issues where it actually covers restructuring of companies, inbound and outbound investments, and tax efficiencies. I'm going to now pass it over to Mr. Koo, who's going to cover income tax developments. And over to you, Mr. Koo.
Very good afternoon, members of the Malaysian Institute of Management, MIM, ladies and gentlemen. I'd like to thank MIM for giving me the opportunity to speak to you today on the highlights of the budget 2022. I'll be delighted to share with you some of the tax proposals in the budget, which may affect you or be of interest to you as an individual or in your business. I think first of all, let's look at some statistics. When the budget was announced on the 29th of October, we saw an allocation of expenditure of 332 billion by the government for the next year. And this is the largest ever allocation in terms of expenditure for the country, surpassing the allocation in the 2021 budget of 322 billion. That was the largest ever when it was announced last year. But this year's budget, in terms of expenditure allocation for next year, is even higher than last year. So with the increase in expenditure, the government revenue is also expected or projected to increase by 5.9% from 221 billion for 2021 to 234 billion next year. So as you can imagine, where would the government get its revenue from? I think as we know, tax collections have always been the main source of income to the government. with the projected increase in government revenue for 2022, I think one can only expect that more taxes will be collected by the government going forward. And as we can see from the screen, the direct tax collection will increase by some 7 billion for next year, and companies will contribute an additional 5 billion for next year. So that's a huge amount for companies, and individuals are not spared, where individuals are expected to contribute an additional 1 billion for next year. So this is, I think, the scene going forward, and I think one would expect that there'll be more tax audits, more enforcement of the activities by the authorities, be it the RRB or customs, in order to meet the government's projected revenue collection for next year. Okay, let's move on straight to what are the proposals for personal tax that we may be interested in. I think before we go into the details, when the budget was announced, we didn't see a reduction in personal tax rates. That may indeed be a good news. Why do I say so? Because a reduction in the personal tax rate may indicate that the government may introduce another form of tax in the near future, such as GST. So I think with no reduction in personal tax means there should not be any new taxes introduced in the near future. So what are the proposals in the budget on personal tax? There are a number of personal reliefs introduced or extended. In fact, the first one is on social contribution by employees. The relief of 250 ringgit will be increased to 350 ringgit starting from next year, and to include EIS, which is an employment insurance scheme. The next one is on upskilling and self-enhancement courses. Currently, the relief of 1,000 ringgit is given for individuals enrolling on upskilling and self-enhancement courses. I think this is part of the initiative given by the government to encourage individuals to upskill or enhance themselves, or even to reskill, especially during the pandemic. So the relief will be increased to 2,000 ringgit for 2 years, for the next 2 years. Medical checkup, I think we are aware that currently a relief of 8,000 ringgit is given for serious diseases, and that 8,000 ringgit includes a 1,000 ringgit relief for medical checkup. And the relief for medical checkup will be widened to include checkup or consultation on mental health. Again, this is the response to the rise in mental health issues faced by some of the unfortunate people during the pandemic. Okay, we also see other proposals on reliefs. For example, installation, rental, purchase, and subscription for EV charging facility. So this is a new relief introduced. 2,500 ringgit will be given for individuals to buy basically EV charging equipment, not the car, but the charger. And also EPF contribution, I think we are very familiar with this relief. Most of us who are in employment would have contributed to EPF and would have claimed this relief of 4,000 ringgit a year. And it will be widened to include voluntary contributions made by a certain group of categories of people, for example, freelancers or workers in the gig economy. Next one is on the purchase of mobile phone, computer and tablet of 2,500 ringgit will be extended for another year until 2022. I think this is also another relief that is very popular among us, where we have claimed because I think we have depend a lot on mobile phone, computer and tablet to carry out our work. So this will be given for another year. And this is given in addition to the lifestyle relief of 2,500 ringgit. So if one were to purchase a handphone, for example, you wanted the iPhone very badly, and you make a purchase of the iPhone by end of the year, if the phone costs 5,000 ringgit, so what you can claim is a relief of 2,500 ringgit under this relief, and the balance 2,500 ringgit can be claimed under the lifestyle relief. So in total, you were able to get a relief of 5,000 ringgit for the cost of the phone. Okay, childcare fees. Currently, 3,000 ringgit is given for parents enrolling their children in kindergarten or childcare centers. That will be extended for another 2 years. until 2023. Contribution to deferred annuity schemes, a relief of 3,000 ringgit will be extended for another 4 years until 2025. And lastly, domestic travel expenses. I think this will encourage domestic tourism. Currently, if you were to stay at hotels in local hotels or even entrance to theme parks, you'll be able to claim a relief of up to 1,000 ringgit, and that will be extended for another year. And this will also cover domestic tour packages. Okay, let's look at one example. What are the additional reliefs that a person could claim in 2022? So if you were to add up some of these common types of reliefs, I think we are looking at a total relief of 13,100. And assuming the individual is subject to tax and he has reached the tax bracket of 20%, so that will translate into a saving of 2,600 ringgit. So I think it's something to look forward, and I think it's also useful that we plan our purchases carefully so that we're able to enjoy the maximum relief for a particular year. Moving on corporate tax, there are a number of interesting proposals, or they were actually surprises for corporate taxpayers. I think we have heard a lot about foreign source income, and we have heard a lot about the Cukai Makmur. So let's look at the first surprise on foreign source income. So the background to this is that Malaysia is on the territorial system of taxation. So countries around the world can either adopt a territorial system of taxation or a worldwide system of taxation. So we, Malaysia, adopts the territorial system, which means for resident, income derived from sources in Malaysia will be taxed, and income derived from sources outside Malaysia, or what is commonly known as foreign source income, will only be taxed when it's received in Malaysia. But there's exemption given on income derived from sources outside Malaysia and received in Malaysia. So with the exemption, it generally means income derived from sources outside Malaysia or foreign source income is exempted from tax. And taxpayers have been enjoying this tax exemption for many years, I think close to 17 years. And this will be taken away the next day, or on the 1st of January 2022. The government has proposed that the foreign source income exemption given to tax residents will be removed. So this is something that's very drastic. I think some of us may be aware that Malaysia was included in the grey list of the EU, the European Union, that was published sometime in October this year. And I think we know that this change will probably happen sooner or later, but it's actually happened sooner than later. So I think with a window of less than 2 months to go, what can taxpayers do? Or what taxpayers should be aware with this change? I think the government also recognized that sometimes it may take time for taxpayers to bring the money into the country. So a concessionary tax rate of 3% will apply if the money or the income is remitted into Malaysia from 1st January to 30th June 2022. So there's a concessionary tax rate of 3% that applies for the first 6 months of 2022. We have received a lot of questions from taxpayers on this foreign source income, the taxation of foreign source income. And these are some of the common questions that I received. I think if you look at the question on the bottom, does this apply to a resident individual? The answer is yes, because it applies to a resident. So a resident can be a resident company or a resident individual. I think the general test to determine the resident status of an individual is by looking at his presence in the country. Generally, if the person is in the country for 182 days or more, he'll be considered as a resident of Malaysia. And if he brings the money, the income into Malaysia, starting from next year, he'll be taxed on his income received in Malaysia. We also received questions around what if the income was earned prior to 2022. I think we know that the law will come into effect 1st January 2022, but the law doesn't distinguish whether the income was earned in 2022 or before that. So even though the income could have been earned, let's say 5 years ago, when one was working in Singapore and then he accumulated his income from his employment in Singapore, and then he brings back his income only in next year. So I think based on the current proposal, whatever that's brought into the country from next year will be taxed. What if the money was not remitted into Malaysia? So yes, the taxation or the tax is triggered upon remittance or upon the income received in the country. So if one decides not to bring the money into the country, then there'll be no tax because it will only be taxed when it's received. There are also questions asked on capital gains. What if I dispose of a property? If an individual owns a property in Singapore and he disposes of the property and he makes a capital gain or he makes a gain on the property and he then brings back the money into Malaysia. So are capital gains subject to tax? The quick answer to that is no. If one makes a capital gain and brings back the money into the country, it shouldn't be taxed. What if tax was already paid in the foreign country? Again, the country where the investment is located or the property is located could have been taxed. Income from arising from those investments could have been taxed in a foreign country. And if the same income is taxed again in Malaysia, the credit were to be given against the Malaysian tax in respect of the taxes paid in a foreign country. This is to avoid the same income being taxed twice. And lastly, what are the documents that taxpayers should keep? I think we know there's a record keeping requirement of 7 years, but in respect of the taxation of foreign source income, I think we need to look at the source of the income if possible. And also, we're also waiting for guidance from the RIB because I think this is a very big change, a very fundamental change to the tax regime on foreign source income. And a lot of questions have been asked, and we're waiting for the RIB to give further guidance on this. The next one is on Cukai Makmur or prosperity tax. I think as the word suggests, it is intended to levy a higher rate of tax, in this case 33%, on companies that are making super profit or extraordinary profit during the pandemic. And it is the 33% tax is imposed on chargeable income in excess of 100 million for the year assessment 2022. So it's a one-off year, which is subject to the special tax rate of 33%. I think if you look at an example here, if a company's chargeable income is 250 million for the year assessment 2022, then on the first 100 million, it'll be taxed at the prevailing rate of 24%. Whereas for the remaining 150 million in excess of the 100 million, that will be taxed at 33%. So in total, if the company's chargeable income is 250 million for 2022, his tax payable will be 73 million, 73.5 million. So the average tax rate for the company will be 29.4%. So that will be higher than the usual 24%. And I think this proposal has also caught companies with early financial year ends. For example, if the company financial year end is 31st January 2022, it has caught those companies by surprise because that will leave the company very little time to react. And there were also other proposals on corporate tax. They are mainly related to extending the current deduction or benefits given to corporate taxpayers. The first one is on rental reduction given by the landlord to the tenant. The landlord will be able to claim a special deduction. I think this is to continue to encourage the landlord to support the tenant while the country reopens its economy. So this is extended for another 6 months. Special deduction on the cost of renovation and refurbishment of business premises. Again, businesses could take advantage of this if the business is thinking of renovating its business premise. It could claim a deduction up to 300,000, provided the renovation is completed or provided the cost is incurred by 31st December 2022. There's also a double deduction given in respect of the number of expenditure. The first one is on rental of employee accommodation under MITI's Safe at Work program. This is basically a program by MITI to create a safe work bubble where staff accommodation or workers accommodation must comply with strict SOP requirements. So a double deduction is given on the rental expense of such premises by the employers. Companies that implement a structured internship program approved by Talent Corporation are able to claim double deduction. That will be extended to 2025, and also double deduction for companies that provide scholarships to students. So that also be extended to 2025. Okay. Moving on, more incentive for corporates. The first one is a tax rebate of 20,000 for the first 3-year assessment, in which a micro, small, and medium enterprise commences its operations. So this is to encourage startup of businesses amidst the pandemic. So that will be extended for another year. The next two are very targeted to the tourism sector. I think you may recall that 2022 was the Visit Malaysia year, and that didn't kick off very well because of the outbreak of the COVID. So the government is looking at this incentive again by extending the incentive given to the tourism industry for another 3 or 4 years. The next one is on additional reinvestment allowance. I think reinvestment allowance has been a very popular incentive among manufacturing companies. And for companies that reinvest, for example, for every dollar that the company spends, the company is able to claim 60% reinvestment allowance. So if the company were to spend 10 million to reinvest in machineries, the company will be able to claim additional 6 million as reinvestment allowance. So that will give tax savings to the company. And this reinvestment allowance incentive will be given for another 2 years for 2023 and 2024. And lastly, if you can see on the screen, tax exemption will be given to a social enterprise for up to 3-year assessment. So social enterprise is one that is actively engaging in activities that promote social and environmental benefits. So recognizing the role that a social enterprise plays, exemption will be given to a social enterprise for up to 3 years. Other proposals are more of administrative. Carry forward the business losses. I think we know that tax losses can be carried forward for up to 7 years at the moment, and the proposal is to extend the carry forward period to 10 years. So I think that will allow company more time to break even or to come out from losses, so that the losses can then be utilized against the profits that the company makes. Withholding tax, 2% will be imposed on monetary payments made to an agent, dealer, or distributor. So this is basically to make sure that taxes are paid by the agent, dealer, or distributor, because it is the obligation now of the company to withhold tax when making such payments to the agent, dealer, or distributor. So the company will have to withhold 2% of the payment made, and then remit the money, the 2% withheld, to the RIB within a period of 30 days from the date of payment. There's also a proposal on unit trust, or I call it retail money market fund. Some of us may have enjoyed this benefit, because if you invest in retail money market fund, when you get the returns or distribution from the fund, it's usually tax exempt. And the proposal now is to limit the tax exempt only to individuals. So companies investing in retail money market funds from 2022 onwards will no longer able to receive tax exempt distribution. A couple more administrative procedures on corporate tax. The deferment of tax installment. I think we have seen this before during the MCO, as a way to relieve companies, especially SMEs, from cash flow burden. So for another 6 months, starting from next year, for micro, small, and medium enterprises. Revision of tax estimate, the 11th month. Again, this is administrative. Currently, companies are able to revise its tax estimate for 2 times in a year, in the 6th and the 9th month. So this is the additional month where companies can do so. Implementation of tax identification number, TIN, beginning 2022. I think you may recall that this was also introduced by the government some time ago, but that didn't materialize. So this was brought back again by the government, and it will be for companies and individuals who reach 18 years old. And TIN, or tax identification number, will also be used for RPGT filing purposes, and even for stamp duty. So I think this is the way where the government is able to track transactions of the taxpayers. For example, the purchase of real property or SPA, when it's sent for stamping, or even business agreements when they are sent for stamping. So the government or the IRB would definitely have more visibility on the transactions of the taxpayer. And lastly, tax compliance certificate will be required for companies participating in government procurement starting from 2023. So only tax compliant companies will be able to participate in government procurement or government projects. Okay, there are also other proposals that I would like to share with you on other aspects of taxation. For example, RPGT. So I think we know that different rates apply to citizen or PR as opposed to a company. So if you look at the table here, the RPGT rate that applies will depend on the holding period of the property. If you sell the property within a short span of time, for example, within 3 years, the rate will be 30%, as opposed to if you were to sell the property after a period of 5 years. So for citizen and PR, the 5% tax rate that applies for disposal after 5 years will be reduced to 0%. So good news for those of you who like to dispose of property. You may want to do so in the coming year. The rate for company remains the same, which is 10% for disposal after 5 years. And you may also know that there's also retention sum on RPGT transaction. The buyer in this case will have to retain a sum of money currently at 3% of the purchase consideration and remits that 3% retention to the IRB, so that the seller will only receive 95%. And it is proposed that the retention sum be increased to 5% for disposal within 3 years. I think if you were to look at the RPGT rates here, the disposal within 3 years is actually very high at 30%. So I think the current 3% retention sum will not be sufficient usually. So the IRB or the government is now proposing a higher retention sum of 5%. Okay, there are also other couple proposals. Stamp duty, contract notes for trading of listed shares, currently at 0.1%, will be increased to 0.15%. And the limit or the cap of 200 ringgit per contract note will be removed. So I think for those of you who have a lot of trading in shares or listed shares, there will be more stamp duty to pay going forward. Stamp duty exemption for restructuring or rescheduling of loan agreements will be extended for another year until 2022. And for SMEs that are involved in merger and acquisition activities, do get stamp duty exemption as well on the number of instruments of transfer, for example, sale or leasing of real property or machineries, MOU, loan agreement, and tenancy agreement. So this will be extended for another 6 months for application received by MDEC. Okay, moving on indirect tax. On sales tax, the first one, I think we are very familiar with this because Dr. Jasmine mentioned just now about contactless shopping or contactless economy. So I think as we are engaged in more online shopping, especially sending goods from overseas, currently if the value of the consignment of goods by air courier, sent by air courier, is not more than 500 ringgit per consignment, there's no sales tax to be imposed. But starting from 1st January 2023, sales tax will be imposed based on the value of goods imported into the country. This is by air courier sent to consumers. So I think we'll wait to see how this will be enforced, because the government also proposed that the sellers outside Malaysia would have to register for sales tax and charge sales tax on the sales to Malaysian customers. Exemption on cars, yes, it has been given before and will be extended for another 6 months on passenger cars, CBU and CKD, and also on electric vehicles, EVs. So for those of you who are interested in EVs, you do get exemption, in fact 100% exemption for a number of years. Okay, on some proposal on service tax, basically it's the imposition of service tax on delivery charges provided by any service provider, including e-commerce platforms. So this is basically imposed on delivery of goods. So if you, as you can imagine, if you were to buy goods online again, and if they send the goods to you, there will be service tax 6% going forward. Of course, exclusion here is F&B delivery services. So if you order food by Grab, for example, then there's no service tax on delivery charges. This will start July 2022. Exemption from service tax on brokerage services related to trading of listed shares starting from next year. And others, I think the first one is very interesting, the Special Voluntary Disclosure Program by Customs. I think we have seen this implemented before by the RRB about 2 years ago. There was a Special Voluntary Disclosure Program on income tax matters by the RRB. And now Customs is following the same route by introducing this Special Voluntary Program. But this is all that we have at the moment. 100% penalty remission in the first phase and 50% penalty in the second phase. And the remission of tax may be considered on a case-by-case basis. So no further details were announced, but something to watch out, because this will be an area where taxpayers or those who are subjected to indirect tax could take advantage of if you want to make voluntary disclosure. The last two on exemption on tourism tax will be extended for another year. This is basically for foreign tourists coming to Malaysia and stay in hotel accommodations in Malaysia. And exemption on entertainment duty. So if you were to go to cinemas or theaters, you have to pay entertainment duty currently, and that will be exempted only in the federal territories for the period until 2022. Yeah, that concludes my presentation. Thank you for your attention. I shall now pass on back to the MC. Thank you.
Mr. Koo, thank you so much for that. I must say that you were spot on about the interest in the foreign source of income. It seems to have attracted a lot of questions, so I'm not going to summarize anything for now. We will leave it for question and answer at later stage when we go into the panel session. I'm going to actually now introduce Professor Dr. Jomo, who is our third speaker. He's got a whole list of accolades. He's a household name in the area of Malaysian economics. He's a senior advisor at the Khazanah Research Institute, fellow at the Academy of Science, emeritus professor at the University of Malaya, fellow in Initiative for Policy Dialogue in Columbia University, and many, many more. He's authored, and edited 100 books. He's also won an award. I think we have to have the man on stage. So here's passing it on to Professor Jomo, and his topic for today is Macroeconomic Outlook for 2022. Over to you, Professor Jomo.
Thank you very much, especially to the Malaysian Institute for Management for kindly inviting me to be with you today. I'm sure all of you have seen many PowerPoints and other data and tables. And so what I will try to do over the next half an hour or so is to try to cover a range of issues relating to the macroeconomic outlook, which are perhaps slightly behind the numbers. And this, I think, is very important for us to appreciate the challenges which we face in these times. I think it's quite appropriate for us to begin by recognizing that there are no easy options available in this in challenging times which we face. They are challenging, of course, precisely because of the pandemic and its consequences. But even its consequences are not predetermined, because there are different countries which have handled the pandemic in different ways. And as a consequence of the different ways in which they handle the pandemic, you have different consequences. For example, in East Asia, we know that many countries have not adopted stay-in-shelter lockdowns. They have not had what we call MCO or PKPs in their own countries. If you look at Japan, there has never been a nationwide lockdown. Likewise, in Korea, in Taiwan province of China. In fact, in China itself, outside of the 3 provinces around Wuhan city, during the first couple of months of the pandemic in China, there has not been a nationwide stay in shelter lockdown. Certainly not outside of those 3 provinces. Likewise, in Vietnam, in Laos, and other parts of East Asia. Even in Southwest India, for example, in Kerala state, there has not been lockdown measures. Nonetheless, all these governments have taken very, very vigilant and timely actions to deal with this crisis in different ways. And in many ways, I would suggest to you that by taking preemptive action and by acting appropriately in a targeted fashion, they have been able to avoid wide-scale stay-in-shelter lockdowns, which have been the most disruptive. Because let's face it, the stay-in-shelter lockdown is a very, very blunt instrument. It's a blunt instrument in many different ways, but most importantly, from a macroeconomic point of view, it disrupts economic activity, especially economic activity which requires the producers, the suppliers of the activity to be able to be physically proximate to, or to be able to move to a particular place of work and so on and so forth. So this is very important for us to consider. But there have, of course, been many other factors as well in trying to look at the implications of the stage of the pandemic. And of course, we have seen an international slowdown, and we have seen very inappropriate policy measures undertaken by many governments. If you look, for example, at the inflation which is taking place, undoubtedly many countries are facing inflationary pressures, but many of these inflationary pressures have been due to supply chain breakdowns. Raising the interest rate is not going to address such a supply chain breakdown. You have to address the supply chain breakdown at source. So you have a blunt instrument of raising interest rates, which will make which will worsen the macroeconomic effects of the crisis on ordinary people, on businesses, and so on and so forth. And this will have very important implications. So having a sound understanding not only of the economy, but also of how the economy interacts with the rest of society is extremely important. That is why many of us have been calling for a long time, from the beginning of the crisis, that we should consider the range of policy options adopted. But unfortunately, in this country, as in many other countries in the world, we tend to be influenced by Western precedents. And let us remember that at the beginning of last year, there were 2 very, very important people in the English-speaking world. One was a man who didn't even believe that there was a pandemic, namely Donald Trump. And the other, of course, was Boris Johnson, who has, as the Prime Minister of Britain, has a tremendous influence on what goes on in much of the English-speaking world, particularly Commonwealth countries and so on. So as a consequence of that, we tend to be very influenced. So for example, our first PKP or MCO was introduced after Britain changed course. For those of you who have longer memories, you might remember in the middle of March last year, around the 17th of March, the Imperial College of London published its study showing that the number of people likely to die as a consequence of the COVID-19 pandemic would be somewhere close to about 2% of the population. Now, I'm not suggesting that projection was correct or wrong or whatever, but the previous policy was to strive for so-called herd immunity by allowing the disease to spread among the population and to thus develop immunity of the community as a whole. So by only changing policy after Britain had changed policy, we actually slowed things down. Many other countries in the region were already taking preemptive measures. And in fact, in Malaysia, there were people, even in the Ministry of Health and related bodies, who were already talking about the ability of Malaysia to be able to take the necessary preemptive measures, and even we're talking about vaccine production as early as the 3rd of January 2020. The 3rd of January 2020. Remember that the reporting, the official recognition of the SARS-CoV-2 virus only took place at the end of December 2019. So we are talking about a response, a recognition of the enormity of the problem here in Malaysia by the relevant officials as early as the first week after the official report recognition of this. And very soon thereafter, there was a recognition that that there were infections in this country, and the number of people who were recognized as such actually went up. However, we also have to recognize that there were many mistakes made, but also very importantly, we did not have the necessary follow-up measures. Consider, for example, the famous Tabligh cluster, where about 18,000 people attended a week-long retreat in Sri Petaling. And about 2,000 of them were from the region, Southeast Asia, as well as India and Bangladesh. And many of them subsequently returned to their respective countries. Almost all these countries took measures to check these people who were coming back from Malaysia. But to date, more than 4,000, almost 5,000 out of the remaining 16,000 Malaysian residents have not been identified. In other words, our contact tracing was very, very poor, very amateurish, considering a country which claims to be on the cusp of becoming a developed country. So we can see that that state capacity, government capacity, is extremely important in being able to deal with this. And the East Asian countries have been much more successful in dealing with these problems precisely because of that. Now, let me go back to some of the other macroeconomic imponderables. So I think it is when you normally look at this macroeconomic situation, because Malaysia is such an open economy, it is usual to look at international factors. And almost nobody can talk with any seriousness, with any certain degree of certainty about what is going to happen. So I do not envy the Minister of Finance. I do not envy the people in the Ministry of Treasury, in the Ministry of Finance, who are responsible for trying to make projections. But I think what is important is for us to recognize the range of possibilities, and this is something which has been increasingly recognized in recent years. Rather than simply giving one projection, you recognize that there are a range of possibilities, especially in moments of uncertainty, for example, following the global financial crisis of 2008, 2009, and so on and so forth. So it is incumbent upon us to begin to recognize the need to take a serious look at some of these problems as we try to deal with these challenges. And now, let me also point to a number of uncertainties, other uncertainties. It has been mentioned earlier within the last hour, 20 minutes or so, that, for example, there has been increasing protectionism. There has been increasing trade. In fact, the increasing protectionism predates the pandemic. Let me give you two instances of increasing protectionism. One instance, of course, is following the global financial crisis of 2008-2009, and a number of countries, the G20 countries, the biggest economies in the world, and also some other economies introduced measures to reduce their degree of openness and supposedly their degree of vulnerability. So those measures were introduced as far back as 2009, 2010, and so on. And this has been widely recognized by the OECD and others. Now, before the pandemic as well, it is important to recognize that there was a so-called new Cold War situation emerging. A new Cold War situation emerging, first begun during the Obama administration and subsequently pursued by the Trump administration with far greater aggression, and of course continued thus far by the Biden administration. So some degree of continuity despite the very different regimes which we have seen in the United States over the last 6 years. And of course, the Trans-Pacific Partnership was very much part of this. It was seen as from the outset as a measure to try to form and so-called to isolate China from an economic point of view. Now, the former Prime Minister of Japan, Abe Shinzo, and his successor, Mr. Suga, were both very much part of this campaign. It's less clear so far whether Mr. Kishida is as such an enthusiast for continuing the Cold War. We have also seen all kinds of people getting involved in this. We have seen, for example, the so-called AUKUS, where English-speaking countries supposedly are united to defend the liberty of Southeast Asia. Who asked them? Nobody. ASEAN didn't ask them. None of the governments in Southeast Asia actually asked them to come to our defense. But nonetheless, they are have volunteered to do so. Now, if you go back, very few of you are old enough to remember, but in the middle of the 1960s, I don't remember this myself, but the history books will tell you that Britain changed its policy. After the end of empire, it decided to retreat east of Suez. That was the slogan, east of Suez. And so in line with that, basically its naval bases were withdrawn from this region. What have we seen within the last year? The deployment of the Prince of Wales to this part of the world, particularly South China Sea into the Taiwan Straits. So we can see, and most recently in the last few days, we have seen the German government, which has never had a presence here since the end of World War I. Okay, since the end of World War I. My grandmother used to tell me stories about how a boat was sunk off Penang and bodies were floating up on the beaches of North Penang. Now that happened during World War I. During World War II, there was some enemy action, but the main enemy action was with the Japanese, not with the Germans. So you can see that what we have seen now, incredibly, after over a century, the German Navy also being deployed into this part of the world. Now, it seems to be now a sort of broad Western alliance being deployed, and the economic dimensions are what concern us here. So there have been a number. So this, as with a lot of other things, is a double-edged sword. On the one hand, you have seen greater resources being deployed for a range of purposes, and this range of purposes, this deployment of resources basically means that instead of deploying things for the common good, for example, for climate change, nothing came out of Glasgow. Let us not kid ourselves. Yeah, there was no significant action which came out of Glasgow. And one of the sticking points, of course, was climate finance. In 2009, when I was still working at the UN, there were promises made about at least 100 billion a year for climate finance. Less than half of this has been deployed ever since then, and most of it has been deployed for mitigation, very little for adaptation. So when countries like Bangladesh or Vietnam see the seawater levels rising and affecting their rice fields and their rice output, this has very, very serious consequences. And without going into details about other parts of the world. In Malaysia, our biggest rice bowl is in the Muda River Basin. And in that area, we have seen 2 planting seasons having been cancelled in the last 5 years because there was not enough rainfall in the water catchment area for the Padu Dam. And what does the Menteri Besar of Kedah do? He has recently approved logging in the water catchment area for the Padu Dam. Okay, so we can see a sense of not only inaction of climate worsening action being undertaken by the elites of the world, including our own elites. So we have a very, very serious situation on our hands. And of course, as I was trying to suggest earlier, it is not simply at the international level, because many decisions are made at the national level. And at the national level, we have seen a very unfortunate situation where you have seen a change of government taking place at the outset of the pandemic, and another change of government taking place soon after. And what we have seen as a consequence of these two changes of government has been a great deal of government inaction, partly because political leadership has never been properly united, is not united towards any policy goals. Its unity is to basically to keep itself in power and to try to ensure and enhance its electoral prospects for the next election, much of which they might well succeed in doing. But this has not meant that policy has been wisely taken. And there's so many examples which I'm sure all of you are quite familiar with, so I need not go into that. But I think it's very important for us to recognize that we do not have an all-of-government approach. Most of the ministries do not work together, and they often work at cross purposes. Even the economic ministries seem to be working at cross purposes in some instances, although not all the time. And this, I think, is very, very unfortunate, and is going to worsen our situation going forward. But very importantly as well, we have seen a situation where the public has not been mobilized. The public has mobilized itself, but the public has not been mobilized by government. The cooperation between the public and government has not been very high, and this, I think, is very, very unfortunate, because we have seen, while some of the worst things about Malaysian society have become clear, but we've also seen a tremendous amount of sacrifice. We've seen among frontliners and others, we have seen a certain amount of selflessness among those who have been responding, for example, to the white flag movement, and so on and so forth. So I think it's important for us to recognize that we have missed a number of opportunities, and part of this problem is so serious that I would say that I wouldn't even take the 12th Malaysia Plan all that seriously, and neither would I take the budgetary proposals all that seriously. But as we have heard from Mr. Koo, a very important element, and there used to be an expression of, sometimes attributed to Benjamin Franklin, who used to say there's nothing certain in life except two things: death and taxes. And so there is a certain degree of certainty about taxes, but we certainly have not seen very much else. Now, let me quickly, in the remaining time I have, say a little bit about taxes. Not because I don't have no expertise to get into the areas which Mr. Koo has enlightened you on, but rather I would like to emphasize that ever since 1998, Malaysian governments have been in deficit spending mode. In other words, there has been no serious attempt to try to balance the budget ever since then. So every time the deficit limit, the debt limit is raised, it is a matter of some concern. But it's a problem of regimes since 1998. And this, I think, is a major problem. But I want to mention two other problems which are related to that. And that is the fact that by all accounts, even the World Bank, which is not exactly, doesn't necessarily believe in high levels of taxation, even the World Bank considers Malaysia's tax collection levels to be very, very low by standards of countries at our level of income. Now, we also have a serious problem of, even within one ministry, the left hand and the right hand not being terribly well coordinated. Taxation is not just done by the Ministry of Finance, it is done by the Internal Revenue Board, but also by customs. The customs levies taxes, including what used to be the GST, now the SST. So we have a situation where we do not have the maximum level of efficiency and coordination, which is important. It's imperative for an efficient tax regime. Now, many people in Malaysia, in fact, like to believe that Malaysian taxation has been progressive. And the fact of the matter is that Malaysian taxation has not been progressive since the 1960s. My friend, the late Ismail Saleh, who was a professor at UKM before he was Deputy Director General of ISIS, pointed this out, more than 4 decades ago, and the situation actually has become worse, as has been shown by the studies of, among other people, Professor Wee Chong Hui. Now, on the spending side as well, Malaysian government spending has not been progressive. It has actually been regressive. And this has been shown, for example, by, among other people, Jacob Meerman, who undertook a study on behalf of the World Bank, again, quite some time ago. But all the evidence suggests that this has continued to be so ever since then. Now, what do we see in this budget? We do not see any serious effort to try to address these problems through using the fiscal system, either the taxation side or on the spending side. Undoubtedly, and we have to commend the government for this, some of the measures, for example, to ensure that those on the payroll continue to get paid and so on, are very commendable, and this has been done in many other countries as well. But let's remember that more than half the labor force in Malaysia are not in the formal sector. Very little has been done for them. Very, very little has been done for them. And this is very, very unfortunate. So it is not as if we do not have the means. We have the means. In fact, the means could have been significantly enhanced if governments did not have very short-termist political cycles rather than business cycles. And the situation has been made worse by the fact that you have a government which has not been terribly interested in spending progressively. Now, many of you might say, "Oh, look at how much money is being spent for the Bumiputras and so on and so forth." Let me assure you that money spent on Bumiputras has got nothing to do with progressive taxation. Money spent on Bumiputras, as in South Africa, for example. South Africa supposedly learned from Malaysia's NEP by introducing the so-called Black Economic Empowerment. Okay, and the result of it is that Cyril Ramaphosa, currently president of South Africa, became a billionaire. He used to be a trade unionist, and now he's a billionaire. But if you look at the condition of the vast majority of South Africans, especially South Africans of African South Africans, you will find that their conditions have improved. Undoubtedly, there's no doubt about their improvement, but have not improved as much as they could have improved. Almost 3 decades after the new dispensation was introduced in 1994. So the situation is likewise here in Malaysia. Look at the situation in Sabah and Sarawak. Of the 10 poorest districts in the country, 8 of them are in Sabah, 1 in Sarawak and 1 in Kelantan. This kind of disparities which exist need to be addressed, and so there is no evidence, I would argue, that government spending has become more progressive over the decades. Now, I have relatively little time left, but I think one thing which you always will read about is the whole question about, we have a problem of inflation. We have to deal with inflation. We have to deal with inflation by raising interest rates. Let me assure you, as I mentioned in the example earlier, that first, before you do anything, you should know what the source of the problem is. You don't go around hammering everything just because the only instrument you have is a hammer. Okay, that doesn't solve any problems. Okay, likewise, now insofar as there are inflationary pressures, we have to know what the pressures are. Well, commodity prices have gone up, benefiting us to some extent, but also also raising the cost of living for many people, as well as the cost of production for factories and so on and so forth. Now, this needs to be addressed, but having a higher interest rate is not going to solve the problem. So you don't go around using inflation as the proverbial hammer, hoping that somehow or other is going to address the problem of inflation. You need to identify the source of the problem. And the main source of the problem right now is unfortunate disruption of supply chains due to transportation and other related difficulties, as well as as the new Cold War, because it is only the new Cold War which has changed things recently. It has not been because of the changes in international trade which came about following the global financial crisis and so on. The last point I'd like to make is that we should also have used this budget much more to recognize not only the fact that we do not tax enough in this country, and that the tax system has become quite regressive over the decades, but also we should have paid far more attention to the fact that there are impending changes which have been taking place. Janet Yellen, the Treasury Secretary of the United States, proposed a 21% global corporate income tax minimum. We also have a situation where this global corporate income tax minimum of 21% was pushed down by the G7, by Boris Johnson and others who basically are still trying to offer London as the biggest tax haven in the world. And basically that tax the tax rate was pushed down to 15%. Whether it is finally settled at 15% or 21%, it is going to happen sooner or later. The question is, what are we doing in anticipation of this, and what should we learn? We have seen, for example, that before the NEP, that over 60% of the share capital in this country was owned by foreigners. What is the level now? It went down to under 30%, about 25% in 1990. But now it is almost half again. It is almost half, and the main reason is because it has been very attractive for foreigners to invest in Malaysia. They are exempt from a great number of taxes. In fact, it is more attractive for Malaysians to take their money out and invest as foreigners in Malaysia, because you get exempted from a number of taxes as a consequence of being a foreign company in Malaysia. So we really need to move and think our tax laws and rethink our tax laws for the third decade of the 21st century. And again, we lost this opportunity. One would have hoped that a finance minister who was not a member of any political party would not have been beholden to political considerations. But unfortunately, we have lost that opportunity yet again. Let me stop here. Thank you very much for your attention.
Thank you, Dr. Jomo. It was obviously, the way you've set the message. While we acknowledge there's some progress, it also is very blatant that we have many gaps and challenges that we have to work through, and as a nation going forward. Let me now move over to the many questions that have come across for all of you. I'm going to start off with a question that is going out to all three of you. So please feel free to jump in and answer the question. So the first question is: economic recovery can be helped by the public sector improving its performance in the delivery of the promises in Budget 2022. It was reported by the National Audit Department that there was a loss of public funds and wastage amounting to RM 620 million in 2020. What should be done to stop these losses? I've got a total silence. Professor Jomo, would you like to take a stab at that?
No, this is Mr. Koo is the tax man.
Okay. Yeah, I'll try to maybe look at this from the angle of the Inland Revenue Board, uh, I think we know the modus operandi of the Inland Revenue is basically to do audits, and I think that will continue to intensify. And audit is obviously a very powerful tool because they could always do a surprise audit, you know. So I think we should always on a high alert, and we should always ensure that what we are doing is in compliance of the law. So I think that's a message that I want to send. Thank you.
Any other inputs from the other panelists beyond Mr. Koo? Okay, so I'm going to then let it pass, and I'll take that. Thank you, Mr. Koo, for giving us your input. This question goes out to Dr. Jasmine. What is Microsoft's private sector strategy to assist Malaysian SMEs in achieving digital supremacy and readiness for post-pandemic recovery?
Thank you, Mr. Ganti. I think when Microsoft announced the Bersama Malaysia initiative, while we were looking at making, we have committed to make an investment in Malaysia. I think coupled with that announcement, we committed to skill up 1 million Malaysians. While there's a long way to go, but to date, we have almost trained about 120,000 people. That is one opportunity, and the large group of people that we look to skill and upskill come from the MSME sector, the SME sector. While the uptake could be greater, definitely, but I think as SMEs look to recover, while technology is going to play an important role, the people part of it is really important. We do partner with SMEs, we do partner with institutions on digitization of the SMEs. But I think I want to bring it back to the skilling. People are the renewable resource, and if we could skill up the people, they would then be able to fuel the SMEs. And today the challenge is that we have a gap in the skilling pool. So the talent pool, and that's one of the biggest commitment Microsoft has made in Malaysia to skill up people.
Could you share some specifics in terms of the scaling up? Because, as you rightfully pointed out, 120,000 to 1 million aspiration is quite a gap. So are there any specifics that you all have, honed into for, scaling up that number?
So our partnership with HRDF is one of the biggest one. We have committed to partner to scale up 350,000 Malaysians. And the area that I think just beyond skilling, I think many different organizations are looking at skilling. I think our interest is more in ensuring employability, and certification and employability is what we are looking at. I think with skilling, if it doesn't address employability, it is quite meaningless. And the three big areas where we see opportunity is in data science. Of course, this is a bit more on the advanced side of things, data science, cybersecurity, and more of the technical analysts, where we see opportunity for jobs. Within our own ecosystem, we have 2,000 partners in Malaysia, and there's still a talent shortage. But beyond that, we also bringing in skilling from LinkedIn and GitHub, which are all subsidiaries of Microsoft. So what are we doing? We are looking at partnering with the key training agencies like HRDF, SOXO, Talent Corp, universities, but also look to partner with NGOs to bring digital skilling to people under the NGOs that need to be, especially not caught in the system. We do see people who are not caught in the schooling system or in university that also require just basic digital literacy. So we are also looking to address that.
Thank you for that, Dr. Jasmine. Mr. Koo, we are going to move on to you. This is also a pretty long question, so bear with me. This is about taxation on foreign source income. So a company having a loan interest income from its holding company, and it has reported in the accounts as a foreign interest income every year, and are exempted from tax but the amount has not been remitted to the Malaysia subsidiary account and is rolling up as a loan to the holding company. Once the contract has ended, if the holding company remits the loan amount to its Malaysian subsidiary, will this loan plus interest income be subject to tax?
Yeah, thanks for the question. Yeah, I think in this example or in this question, the interest earned by the Malaysian company from the loan given to its foreign related company will be a foreign source income. So in the past, the Malaysian company has been enjoying exemption on such income. And going forward, when the income or the interest is remitted into the country, you'll be taxed. So the answer to that is that yes, you'll be taxed upon remittance. And if the remittance consists of the loan portion and the interest portion, it is only the interest portion that's going to be taxed. So I think again, what documents should taxpayer keep? I think that is important. So if you were to remit, let's say 100 million today, I think you need to have documents to prove that 100 million consists of interest or is it consists of the loan portion only. Yeah, and we're also waiting for further guidance to be given by the IRB.
So clarity of documentation that delineates the interest versus the income itself, what you're saying. Yeah. All right. Thank you, Mr. Koo. I'm going to ask you just two more questions because they are also related to the foreign source income. With the new change of taxation of foreign source income, what is the impact to the double tax agreement with other countries?
Yes, the double taxation agreement will be still in place because that is the tool that's going to protect taxpayers from incidents of double taxation. Assuming the income when it's remitted into the country is subjected to tax in the foreign country, for example, in the form of withholding tax, then when it's received in Malaysia, it'll be taxed again in Malaysia. So the double taxation agreement will provide relief in a sense that the taxes suffered in the foreign country can be set off against the tax payable in Malaysia on the same income.
Okay, thank you for that. I'm going to do one more and then we'll move on to Professor Jomo. If I earn foreign equity dividends, which I have already paid withholding tax of 30%, and the dividend is received in a local bank foreign currency account, do I now pay additional tax?
Yeah, I think this is somewhat related to the earlier questions. So if there is a foreign withholding tax on dividend of 30%, and if the dividend income is remitted into the taxpayer's bank account in Malaysia, then the taxpayer has to pay Malaysian tax now on the dividend. And assuming the taxpayer's tax rate is 24% for corporate, then the 30% withholding tax that has been deducted in the foreign country can be credited against the 24% corporate tax in Malaysia. So I think in a very simple example, there shouldn't be any tax to be paid in Malaysia because the 30% withholding tax is higher than the 24% corporate tax in Malaysia.
All right, thank you for that. Now going on to Professor Jomo. Professor Jomo, this is also a very long question, so bear with me. Is Malaysia a debt-centric country in the light of RM 1.2 trillion being owed to the commercial banks by the consumer sector? A further RM 1.2 trillion is owed by the corporate sector to the commercial banks. The household population in the country is about 7 million. 1 million households are poor and not entitled for loans. Another 1 million households did not borrow from the banking sector. Therefore, only about 5 million households have debts with banks to the tune of RM 200K at any one time. The figures that the participant has quoted is pre-COVID, is a pre-COVID period. And his question is, his statement is, it is likely for a debt bubble issue at the post-moratorium period. What are your thoughts about this?
Thank you very much. I think you should take down the name and the contact information for the questioner because he obviously has done his homework. And these are very important things which should enter the public domain. The fact of the matter is that Malaysia is heavily indebted. Malaysians are heavily indebted. The country as a whole, the government is also heavily indebted, and I'll come back to that question in a moment. As for the indebtedness of Malaysian households, the problem with economics is that perspective matters, and how you spin anything matters. So you can say that it's very heavily indebted, or you can say that Malaysia has a very high level of financial inclusion. Okay, both are the different ways of describing the same situation. So there are Malaysians who are very proud, and they go to international conferences and tell you and proudly announce that the average household owes over 80% of income. Okay. Now, many people would be very worried about that under normal circumstances. I was involved in a webinar recently where a young person asked a question, and it turns out that the generation before me, okay, many of them are still around. The generation before me could well afford to buy a decent house and pay off for the house in about 10 years. And then it became 12 years, 15 years, 20 years, 25 years, and so on. Now you can get debts which can be transferred to the next which will go to the next generation. Now you can say, oh, this is financial innovation. You can also say this is a reflection of the high level of indebtedness. Okay, and both are true narratives. Now, these official figures which we have of 80+% and so on are from Bank Negara. But is Bank Negara capturing the indebtedness of those of the for example, the petty hawkers, or the indebtedness of the casual labor? You know, the legendary Along. The legendary Along does not go to nice middle class people who are listening in on this webinar. The legendary Along goes and is hanging, and his thugs are basically collecting when you collect your weekly salary or your monthly salary, especially, for example, for people who are doing the lowest grade workers. Now, 30 years ago, many of them would be part of the union of city hall workers. Today, there is no such category of work for city hall anymore. It's given to a private company, and so much of that often means that much of this work involves foreign labor. Now, a lot of Malaysian statistics do not even recognize the existence of undocumented foreign labor. Our official statistics only recognize the documented foreign labor. But as Richard Ryot, who was the Minister for Human Resources in around 2014, 2015, he commissioned a study which estimated there were 6.7 million foreign workers in Malaysia using, using numbers from the telcos. Okay. Now, out of that 6.7 million, if you look at the official figures for 2014 or 2015, I can't remember which year now, the official figure is 2.2 million foreign workers were in Malaysia. In other words, 2/3 of the foreign workers in Malaysia were not even documented, if those estimates are correct. Some people even claim that those estimates were on the low side. Okay, so whatever the case might be, we have a gross underestimation, and because these workers are treated far worse, Malaysians who are doing similar jobs often have to accept those conditions of work. So, for example, a team which went out to do research in West Pahang on rubber plantations who are using only casual labor nowadays found that they were earning far less than the minimum wage in this country. Okay, so these are conditions which are existing in the second decade of the 21st century, albeit before COVID. Okay, before the pandemic. Now, you can go on and on about these stories, but the point is that we often grossly underestimate many of these things. So what does it mean to say that that a casual worker who's earning, let us say, 1,000 ringgit a month, or maybe 1,200 or 1,500 to be a bit more generous, is indebted, and basically right after collecting their wage, they go and pay off the alum, and they are paying interest rates of about 1.5% per month. Okay, so we are living in a world of tremendous disparities and exclusions. And so what is called financial inclusion and exclusion can mean different things to different people. So we have to be very, very careful about this. Dr. Jasmine made a point earlier, which I thought was very, very important, that COVID pandemic has accelerated digitalization, especially of communications in this country, far beyond any plans by MDEC or this government or any other government for that matter. But it's of a particular type of digitalization, right? And we also know that for almost all of 2020, the Ministry of Education was relying on children having access to digital appliances to be able to follow classes. But we also know that only 6% of children actually had access to such digital devices. And we don't even know whether they have exclusive access, because they might have had to share it with some siblings. So we have a situation where we are making policy in this case, for the 6%, ignoring the fate of the 94%. I mean, this is the world in which we live, and we have subsidies, for example, for sugar, which are actually worsening the health of Malaysians. So Malaysians are living longer, but a longer period towards the end of their life is actually in poor health, precisely because of the kinds of poor diets which we have. So you might have enough to eat in the form of, let us say, let me not name any brand name, but let us say some instant noodles. But what kind of nutrition are you getting? So we really have to think very, very thoroughly about the kinds of reforms. But a short-termist government will not think about such reforms. You really need to have a far more serious discussion, because you're not going to win votes whether or not you improve the nutrition of the children. You're not. In fact, you're probably going to lose votes if you reduce the amount of sugar in bubble tea, for example. Okay, you might even lose votes for closing down vaping parlors. Things like that. So we often these numbers, the numbers do not capture this. Now, the other point I was going to make about indebtedness is that the Malaysian government, there's been a lot of talk, quite correctly and understandably, about how the debt limit, domestic debt limit, has gone up. But what we do not often pay attention to is the huge increase, especially over the last decade before 2018, of government guaranteed debt. We, the Rakyat, will still have to pay for that government guaranteed debt. That government guaranteed debt, for example, for Dana Infra, which is the largest of these companies. All the infrastructure which is being built is not being built for free. And very often those contracts are not even transparent, and we may be overpaying for them. I have alleged this in the case of ECRL. The estimated expenditure by the Malaysian government is over 80 billion. Okay, whereas my engineering friends, I used to be in an engineering class before I became an economist, and they estimate that even with the tunnel, okay, it would have cost under 20 billion. Okay, now if you remove the tunnel, which is the case now, it would be even less. Now the thing is that all these contracts were given with so what you have done, and especially now that the money which was in Kwan, okay, money which was supposed to be not to be touched, is supposed to be for the next generation, because we have deprived them of the possibility of oil and gas revenue, for instance. All that is being taken away from them. So we can have an intergenerational theft, basically. Now, people like me who are already white haired, I see all of you have still got your black hair, but people like me are not going to be have to pay those debts. But consider the implications thereof. What kind of world are we leaving our children, our grandchildren? So I think we have some very, very serious questions to answer. But unfortunately, much of those types of necessary discussions are not taking place. So we need some. And by the way, government guaranteed debt does not even go to Parliament. The Public Accounts Committee hardly pays attention to it. The Auditor General doesn't pay attention to it. The Accountant General doesn't pay attention to it because it is not part of their remit. Okay, so this is a huge problem. So 1MDB, all the debt which went into 1MDB, it was not free money. Somebody will have to pay for it. Likewise with ECRL and all the other things which have gone down the drain. And we have projects which are still on the books, which are never going to pay for themselves. So we really have to very, very much we have to think very seriously about greater accountability, and that accountability can only come about through transparency. And if people, accountants like Mr. Koo and so on, would pay far, far more attention to looking at some of these things, at the numbers involved, because we do not have enough transparency and recognition of the nonsense which is going on. We are never going to really make true progress unless we address this nonsense as well. Let me stop there. Thank you.
Thank you, Professor Jomo. I can't help but just cheer you on the transparency and the fact that lay people read narratives and we make assumptions based on what's shared as citizens. And I think you bring to light on how each of us also have to play a part in really understanding what the narrative means and what perspective and how holistic the statistics have been in terms of being displayed. So thank you so much for bringing that to light. I'm going to move on. I think we probably only have time for one question across the three of you. So we'll go on to Dr. Jasmine. Dr. Jasmine, I think we will do, this question is actually based on the security of data in the process of digital economy. How will Malaysia fare on the security fronts? When it comes to data bridge, I suppose Malaysia is yet to reach the mark in view of manpower shortage. We are very reliant on foreign skills with this regard. Cyberjaya does not live up to its original agenda in view of acceleration and direction of businesses to the digital front. Your thoughts?
Thank you, Sugandhi. So I will start off by saying there's no national security without cybersecurity. And that is, we have seen that when Ukraine was attacked through its critical national infrastructure, and where the entire economy of Ukraine was crippled, and that is one of example. And we have seen both nation-state attacks and economic attacks using cybersecurity. And bringing it down to Malaysia, to the question that you have just raised about talent, there is a global shortage of cybersecurity talent. And that's a fact. More so in this part of the world. And today, cybersecurity is still treated as a backroom IT problem. It is not an IT problem. It's a boardroom problem to be addressed. It's a cabinet issue to be addressed. It is not one for Mampu to address, or, it's not an IT server room discussion. Unfortunately, it is still being treated that way. I think you want to look at this in different ways. And I want to come back to your first question about, transparency and government spending and wastages. In looking at and addressing that as well, right? As we look at digital transformation and hyper transformation, cybersecurity is core and central. And in ensuring, and we talked about transparency and being competitive, but are we even writing tenders? Forget the cybersecurity professional, but are our tenders being written, public or private, that incorporates cybersecurity as a core competency, not only for the technology, but also as part of the delivery. I think it goes back to that fundamental. So, and today the challenge is we need policymakers who are making cybersecurity laws with that in mind, central, and not something that you want to sort of just bolt on. It has to be by design. And I would again say policy, digital native policy sort of builds in some of these principles. Today we see that still missing. So is there a challenge in talent? It's a global challenge. What do we need to do about it? I think we need to look at it from a critical national infrastructure conversation, which we are not, right? We also need to look at it from just national security perspective, which I think we are trying. And thirdly, we want to look at the talent we want to grow. And today, cybersecurity talent is still groomed as an IT talent and not a vertical talent. And it's critical we have cybersecurity talent that are focused on healthcare. We saw the largest attacks during the pandemic on the healthcare system, right? So the way I would see every of these challenges an opportunity for us to reset, but there has to be a political will to reset, and there is a shared responsibility model. What am I doing as a citizen? What can I do? And I think I would like to approach, yes, the government has to do a lot of things. Yes, the private sector has a lot of things that they could do. But as each individual, what are those opportunities out there that I could harness to see? One of the certification that we are offering is a cybersecurity certification, and the sign up could be better for sure. Definitely, we could also go out to advocate more, and this is a reflection of me reflecting. But what is it that we could do collectively? What should companies do? What should government do? And I think yes, there is a shortage, but also how can we then make Malaysia turn that into an opportunity to position Malaysia as a cybersecurity talent hub as well. Thank you.
Thank you, Dr. Jasmine. I think my takeaway from that is it's a multi-layered or many-pronged approach to actually addressing such a shortage. Thank you so much, Mr. Koo. One last question for you. Can you elaborate more on withholding tax of 2% on payment to agents and dealers? Is it applicable to local and foreign dealer agents?
Yeah, the 2% withholding tax is only applicable on resident, agent, dealers, or distributor. So if you're making a payment to a foreign agent, dealer, or distributor, a different type of withholding tax will apply. So the 2% is only intended for local recipients. And that 2% deducted by the company and remitted by the company to the RRB can then be used to set off against the tax payable of that agent, dealer, or distributor himself. So it's just advance payment of taxes by the company on behalf of the recipient to the RRB.
Thank you for that guidance. Professor Jomo, this question comes to you. According to official estimates, Budget 2020's allocation for Bumiputra community comes up to RM 11.4 billion, while the amount for the non-Bumiputra communities is merely 300 million. Is it right to have a race-based allocation in the national budget?
As I suggested earlier, you can have all kinds of race-based allocations, but the question is who's getting it? Okay, as in South Africa, you had a race-based thing to compensate for Black people, African people being discriminated against for decades, centuries, arguably. And then you had, and who benefited? You have a few billionaires, the Cyril Ramaphosa I mentioned earlier. Another one is a man who has got the unfortunate name of being called Tokyo Saxwale. He's a billionaire. But so what? The vast majority of African South Africans are still living in dire straits. And I would say the same thing about the vast majority of Bumiputras. It is not for nothing that the Bumiputras in Sabah now account for 8 of the poorest districts in this country. And we can go on and on with that kind of documentation. So I am not terribly interested. I mean, this regime makes no bones about the fact that it is based on a so-called ideology of being Muslim Malay. okay, whatever that means, okay. But the opposition to it is as much Malay Muslim as anything else. So the question is, what does it mean to have a Malay Muslim regime? What does it mean for an Islamic party, for example, to be which talks about being the vicegerent for God, which is responsible for logging, for destroying the forest, not just anywhere, but in the water catchment area for the most important dam in the northwest of this country. Or for that matter, one could say that of other parts of the country as well. So we obviously have a very perverted understanding of Malayness, perverted understanding of the responsibilities of Muslims, and so on and so forth. And this, I think, is extremely important for us to rectify. But simply playing into the ethno-populist game, is not going to get us very far. I mean, this kind of ethno-populism is responsible for the regimes which exist not only in this country, but also, for example, in Modi's India, and Trump's America, and so on and so forth. We can go on with that list, you see, but it does not help us if to just respond to that type of ethno-populism by an alternative ethno-populism. We have to transcend that, and that has been my plea.
Indeed. Thank you so much, Professor Jomo. And I think we'll have to wrap up the session, but I can't thank all of you, the three of you, enough for being so open, transparent, and able to share your views so generously with us. I would like to thank the participants for the huge amount of questions you have. We will pick themes of questions and get that addressed to you. I would also like to request that you take a few minutes to, click the link on the chat box and give us feedback on the webinar that you've just participated in. We have two more webinars upcoming, 18th and 23rd of November. The details will be emailed to all participants. We do look forward to seeing you joining us in those webinars as well. And as we approach the year 2020, we have planned a whole lineup of webinars with the, insight of all the conversations that we have had relevant to what's happening in the industry, in the globe. So if you wish to sponsor or be a supporting partner, do write to us and let us know. Thank you very much for being with us. I wish you a good rest of the day. Thank you, and see you soon.